All right, Bulls and Bears. Hope everyone is doing well. We're back. This is going to be the last report of June, the last report of the second quarter, 2024. Let's talk about the week ahead. Let's also give you a snapshot of the big picture and a lot more news to get caught up on today. Please make sure you're subscribed before we get started here. First of all, we've got a big week ahead. We've got the markets closing, got the holiday week coming up. Happy early 4th of July to everyone that celebrates the holiday. I'll be back before then. I'll be back, before the 4th, but just kind of a preliminary upcoming week. Happy 4th to everyone. Hope you got some time off of work. I have a lot of time off work, so I'm doing very well here. I'm a happy camper right now. Markets close early on Wednesday. Of course, they're going to be closed on Thursday for the 4th. Got some data coming up this week. The June jobs report's coming out this Friday. That's going to be probably the highlight of the week here. Just looking at my notes here. Job openings reports, private payrolls reports going to be coming out this week. Powell, Fed chairman, is going to be coming out with some remarks this week, releasing the Fed minutes from their meeting. So it's going to be a nice week here full of data here. Well, let's go ahead and jump into this now. First of all, we know the bankers, the politicians, the lawmakers, they're keeping this hyper bubble, mega bubble, inflated beyond anyone's wildest imagination. If you go back on YouTube, there's been people predicting a collapse, a crash, the bubble's bursting for years. What I've always said is, sure, it could collapse anytime, but they would have to pull the plug on all the money creation and how much debt we could just pump into the economy, into the system. Until that happens, like 2008, right? The banks, pulled the rug out from the lending, right? It was very hard to get a home loan, and that brought the rest of the economy down with it. And then, of course, all the mortgages defaulted. Fast forward here today, we're in a whole different world, right? We're putting a freeze on foreclosures. Remember, 2020 foreclosures were just almost as bad as 2008. 2008 was about 8 million. If you look back at 2020, we had what 7 point something million, just under 8 million people in this mortgage protection program. And if it weren't for that, we would have saw 2008 all over again, right? So I don't want to say evolved because I don't think it's a good evolution of what's happening here, but changes have been made on how the system, how the economy is continuing to be propped up, right? So when they can just come in and change the rules at the last minute, bubbles that you thought were going to burst many, many years ago, prices that you thought were unsustainable get even higher, right? Let's look at the cost of living. It's not coming down. Sure, if you look at the headlines, they'll say inflation is cooling. They'll try to paint a positive picture. And by the way, there's talks out there of rate cuts because of cooler inflation. It doesn't mean prices are coming down. It just means prices aren't going up as fast as they were initially. And we were talking, what, 8, 9%. And that's just if you look at the CPI, we were up at 8, 9, 10%, well, closer to 7% on the CPI. But if you look at the real cost of living and what people have to pay for, at one point, we were up 20, 25% year over year. Depends on if you want to look at the official numbers, which, we know are really manipulated and they exclude a lot of things that people have to pay for, which shouldn't be like that, but that's the way it is, right? So we know how the reporting is done. We know that they're trying to keep this economy looking better than it really is. Behind the scenes, we've got record amounts of debt, people going further into debt all the time. The saving rate, how much people have left over at the end of the month after they pay their bills, the savings rate is plunged and it's not recovering at all. And, so how much longer can this last? Or can they just keep coming up with new ways to keep this propped up? And they could. And I've always said here, there's got to be something so big happens to come in and basically pull the plug on this entire system. Could it be everything goes dark, right? We've got I don't want to say leaders, let's say world powers. We have world powers out there warning against a big cyber attack where pretty much everything goes down.
We all know, but still pay insufficient attention to the frightening scenario of a comprehensive cyber attack, which would bring to a complete halt to the power supply, transportation, hospital services, our society as a whole.
That would be the perfect cover for the collapsing economy. Remember, the people running this economy, they don't want the market to come down and then have the fingers pointed at them, right? Because they want to say our policies were working, everything was fine up until this happened, up until that happened, right? Pick your poison up until something happened to throw a monkey wrench in it. It was similar before 2020, right? They came out and they said, "Oh, because of the pandemic, people are doing terribly." No, it wasn't because of the pandemic. It was because people had so much debt. Think if people didn't have any debt, being out of work wouldn't matter. You don't have debt, you don't have bills, you don't have obligations. Of course, that's very unlikely scenario to have no debt, but not really. If you look back before 1913, that really wasn't that easy to get into. It wasn't banks on every corner. Every time you bought something, there wasn't an opportunity to finance it. Now it's easy. You go to buy something online, buy something for $10, $20, and they're going to ask you if you want 6 easy payments of whatever, $5. Let's go ahead and get into the news here. Just kind of wanted to paint the big picture here. Let's get started right here. U.S. banks. It's out of Reuters here. U.S. banks hike dividends after sailing through the Fed's stress tests. Right, so these stress tests, which I think are completely fake and phony and manipulated, these stress tests came out, and now the banks can go ahead and hike their dividends because the banks are fine, no problems. Even though the losses today on the books right now, the unrealized losses for commercial real estate, just commercial real estate alone, is about as much as the losses were in 2008. And if you factor in everything else, if you factor in all the loans out there that can never be paid back, loans to consumers, loans to businesses, these loans can never be paid back. All right, it's just like the national debt; it can never be paid back. If you factor all that in, we're way worse. We're 5, 6, 7, 8 times worse than we were in 2008. Of course, these stress tests say everything's fine, and of course that gave them a nice reason to hike their dividends. And now the shareholders, which is mostly the top 10%, the shareholders are going to get even more money. And that's just one of the many reasons why you continue to see the wealth of the top 10% grow, and the people in the middle class and, of course, the poor people get further and further behind. Here's another example of what's happening right now in the economy out of USA Today. Even as inflation cools, remember, cooling inflation doesn't mean things are getting better. It just means that prices are going up less quickly than they were previously. Americans report sticker shock at the grocery store. Go figure. Let's see, who's this person talking about down here? Okay, she's telling us about inflation. Anyways, maybe you'd rather hear it from her. But here's what's happening. Inflation is cooling. Is it really? If prices are still going up, how is inflation cooling? Right? It's just going up less quickly. So, of course, it says right here, Americans report sticker shock. If prices were actually coming down, you would have less Americans reporting sticker shock. People would be saying, "Oh, wow, look, it's easier. I have more money left over at the end of the month. Things are getting easier. Things are cooling," right? It's just the opposite. Things are getting harder and more difficult and more expensive. Just the rapidness of this is happening more slowly, right? It's pretty crazy how they report things here. Here's another one. Another example here, proof in the pudding here. Inflation out of NPR. Inflation is forcing Americans to be less generous. So people have less money to, I'm going to guess it's going to be about donating and charity and stuff like that. Longtime cabinet maker Robert Lang used to feel good about giving money to less fortunate people. These days, however, he's being forced to be less generous. He says, "I'm no great humanitarian, but I feel really good if I can give a homeless guy $20, which I can't do anymore. The reason rising prices have forced him to dial back on his giving." And he's 69. You would think, you're approaching 70, you're doing better in life than maybe previously. Probably got a lot of home equity if you bought a home 10, 20, 30 years ago. But no, he's being less generous. And it's not just him. Donations are down. Unless you look at thrift stores, donations are up there. But as far as like donations, people don't have as much money as they did before in savings. So it's only natural you're going to see stories like this where people have less to give. And just think, if people weren't in so much debt, if the cost of living wasn't so high, you wouldn't need maybe all these government programs, because people could just donate because they have extra money, they're getting by. You would have maybe most of the people that need help taken care of just by other people, instead of having money printed in the background to fund all these programs to help poor people, right? Maybe the world would be completely different if it weren't for just the way the money is created out of thin air right now. Let's move on here. Another one here on quote unquote cooling inflation here, Reuters. Cooling inflation, boosting hopes of a Fed rate cut. So will they cut rates in September? That's what a lot of people are saying. I know some of you on this channel, I've read your comments saying no, they'll never do that because inflation is still too high. But if the narrative put out there, and if what people believe is that inflation is slowing or cooling, even though prices are still going up, if people believe that that's a good thing, they may believe that the Fed has actually won the battle, and in people's minds, that could justify a rate cut, right? If this is what people believe, then why wouldn't they cut rates? Because people aren't going to really question them if they believe that inflation's actually coming down, or if they believe that people are doing better and having an easier time, right? So you'd be surprised what people believe out there. But speaking of inflation, the high cost of living, the housing bubble here in the U.S. is actually not even as bad as some other countries. Canada's even worse. Australia, look at this recent headline here. Australia median home price, nearly $800,000. No, it actually hit 800,000, not just nearly. The median cost went up by 59,000. Okay, so just under 8,000 to 794,000. But just in the last 12 months, it went up another $59,000. So unlike here, where home price growth is slowing, home prices are still going up very rapidly in Australia. Again, a record divide between incomes and home prices, not just here in the US, worldwide, folks, because we have the same type of money across the globe. Now, of course, there's some countries out there moving into an asset-backed currency, or at least they say they're going to. They are moving away from the dollar. It's happening very slowly. And I've always said here, we likely wouldn't see a collapse overnight when it comes to this de-dollarization move out of the BRICS nations and others. But it is moving in that direction. And that's why I say, stack what the next monetary system is going to be. If you think it's going to be a digital dollar, then you'll have a hedge against inflation if you stack precious metals, let's say gold and silver. But ultimately, I think this is going to go back to hard assets will be the standard for global money. Because think about it, how much longer can countries accept the dollar? It could just be created in infinite amounts, right? Unlimited, infinite, at the click of a mouse, right? Trillions of dollars at the click of a mouse, but yet they're importing or exporting from their country to here. We import a lot of these goods that are made overseas for this click of a mouse type of electronic digits that we send over to them, right? So it's going to be interesting how it plays out here. But nearly $800,000 median home price. That's close to what it is here in California. Imagine California prices nationwide. That's what Australians are having to try to live through right now. More rescue programs. In this case, it's a pretty severe reason here. We've got New Jersey approving foreclosure protections for Hurricane Ida victims. Now, I think most people would agree that, okay, victims of hurricanes, if anyone deserves protections or aid or rescue programs, it would be victims of hurricanes, right? But think about this. When you have some victims getting help, what about victims of other types of bad situations? What about people that have medical events, right? They're victims. They're victims of the cost of medical. What about people that are victims of car accidents and they have a whole bunch of costs they have to cover, maybe hospital bills, maybe liability costs because they didn't have enough insurance? What about victims of just inflation and the cost of living, right? There's victims everywhere you look. And it's up to interpretation if you call yourself a victim or not. Obviously, people would say that hurricane victims are victims, but there's lots of other people that want to be classified as victims when it comes to getting the rescue. And in this case, they're not going to get their homes taken. But think about if most people had their homes paid off, you wouldn't need rescue programs, right? When you've got payments that have to be met every month, then of course, if the income stops or something bad happens, like a hurricane or car breakdown, medical bills, unexpected bills come up, you name it, you're going to have a hard time if you always have some sort of monthly payment to pay. And if you look around, you always have a monthly payment, even if your home's paid off. You still have to pay Uncle Sam what I call rent. You're paying these property taxes. Never goes away, folks. So you're always going to need these assistance programs in the background. Let's talk about what's happening with our, in my opinion, pretty scary topic here. What's happening with our farms and farmers? Very very difficult times here, and you can see it in this news here. John Deere, staple of the U.S. farming industry, John Deere announces mass layoffs in the Midwest amid production shift to Mexico. Folks, this is scary. So we have the ability here to grow food. We have land and we have water here just like any other place, but yet we're shifting a lot of our production to Mexico. Not just actual farming, but making tractors, right? Because the cost of living is so high here, John Deere and other manufacturers, they want to go to where the cost of living is cheaper and they don't have to pay as high wages. More than 600 layoffs in the Quad City area announced by John Deere. Right? Another example of a negative of a high cost of living. Companies don't want to pay these wages here. Of course, they're going to be incentivized to outsource, but yet you see the attempt of keeping the cost of living high. They're afraid. And I'm talking about the bankers, the lawmakers, the politicians. They're afraid of deflation. So their incentive and their motivation is to keep the cost of living high, even though this is going to cause more companies to leave the U.S. It's crazy, but that's what's happening. Let's talk about student loan debt and how it ties in with the way people want to spend their money. We know student loan debt's astronomical, was at $1.7 trillion, can never be paid back, but yet people are out buying things like concert tickets. And here's an article out of MoneyWise. Quote, I don't care what anybody says, unquote. Michigan mom wants to sell her daughter's Taylor Swift concert tickets to pay off her student loan debt. So when you look around, you look at all these people out spending money. They're at concerts, they're at the clubs, they're at the restaurants. You think, well, the economy's doing good. A lot of people, probably most people, I shouldn't even say probably, definitely, most people have a lot of debt, even though they're still spending money, and that's allowed, and that's made possible by the banking system and the way the money is just created. Sell her Taylor Swift tickets, pay off her student loan debt. So, in this mom's opinion, if you have all this debt you should be paying off, why are you out going to concerts? And this is not cheap here. I looked this up here. I couldn't believe this. Well, actually, I should believe it, but let's take a look at this article here. How much are these tickets? This is the Eras Tour, and they're saying that these tickets are going from $500, and I read up to $7,000. Let me see if I can bring it up here because I don't want to give you wrong numbers. Let me bring it up here. According to StubHub, Vivid Seats, Ticketmaster, resale prices for Taylor Swift's Eras Tour can range from $700 to $7,000. First of all, you want to talk about price gouging. Someone as big as Taylor Swift, I mean, she's going to say she's not responsible. She's going to say it's Ticketmaster and it's the arenas that are price gouging her fans. But shouldn't it be the bigger the artist is, they can give better discounts? Just think of Walmart, right? They do the biggest volume of any retailer, so it's a little bit cheaper, right? The more volume, you should be able to lower your prices. Just the opposite with these pop stars. They're going to charge more, and I'm not saying it's her. Maybe it is, maybe it isn't. But the fact that people are willing to pay these prices, even though they have tons of debt, most people tons of debt, and if you look at it together, cumulatively, people have record amounts of debt right now, but yet still paying, in some cases, thousands of dollars for concert tickets. Right? It's pretty wild. Let's look at this Barron's article here. More bank bailouts are coming. That's how it should be, is what they're saying here. Right? I'm not sure what they mean about that's how it should be. Maybe they support the bailouts, or maybe they're just saying that's the new normal now. It doesn't matter, but everybody knows. Um, what else was I going to touch on today here? Look at this. 10% of California credit card holders' debt is late on their credit card payments, but yet banks aren't cutting the credit limits. We only have about 1 in 5 banks are tightening right now. Yeah, about 1 in 5. And the ones that aren't tightening are actually still, many of them are loosening and issuing more credit, which equals more debt as soon as people go and spend it. Over 10%, 10.2% of balances are late. But here's what I wanted to bring up here. Look at this chart and see if I can make it a little bit smaller here to fit it all in here. You can see the year up here at the top, right? So California is the black line. Nationwide, the U.S. is in this, what color is that? Red, orange? I don't know. Not orange. Close to 9.7% currently. Over 10% here in California. Back in 2008, before everything crashed, the debt in California, or the delinquency rather, how many people were late on their credit cards, was over 17%, close to 18%. Not even close, it was 18%. And now we're up over 10%. So we're more than halfway there. And we saw this huge spike up between 2006 to 2007, and going into 2008, it spiked up from about 11 point something to 17 and then 18%. So things fell apart very rapidly. Will that be the way things go down this time? Well, maybe, maybe not, but they have a lot of new ways that they're bringing out here to try to keep things propped up, to keep people in their homes, all these assistance programs. And it could be an inflation nightmare, folks, unless we see, again, a big deflationary situation come up with something so big that it has to be even worse than 2020, right? Does the entire financial system get taken over, get hacked, and everything shuts down? Does the entire grid go down? I mean, you pick your poison, folks, but be ready for it. In the meantime, though, still keep stacking. In the meantime, prepare, but still look for opportunities. I'm still trading stocks right now. I still have stocks. If there's a crash or deflation, sure, I'll take a loss, but then what I'll gain buying up assets if and when they become cheaper would be even bigger, because you have to have some cash. And that's the difficult part for most people. If things crash, some people look at that as a buying opportunity, and those people that call that a buying opportunity have cash. Sad part is most people don't have much cash left over to invest now, and even if prices crash, they wouldn't be able to invest because they have hardly any savings, right? So hopefully you have savings. If you don't, I mean, you're just one of the people out there that's just living life to the fullest. What's that? OLO, only live once, right? Just have as much fun, spend as much money, take on as much debt as possible. I can't blame the people that do that either. I mean, whatever your game is, hope you're doing well. Hope you're happy. Come back to this channel for more updates. Sorry, I kind of rambled in today's report, kind of a long one, but thanks for being here. And we'll be back very soon with another update, another report. Please make sure you're subscribed, and we'll see you very soon. Keep stacking, everybody. Peace and big love.